Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto markets. I'm going solo today, no guest. But for those who have been watching every week, you probably know I had Alex Thorne at Galaxy on last week. It was really riveting, kind of talking about what was happening with the Genius Act. For those who remember, he came out and said only about a 10% chance that it passes. And then about a day later, he revised that after we went live and said, actually, I'm up to about 60-40 that it does pass. And obviously, after yesterday's news, seems pretty clear that this is going to pass now. So it just shows you how crazy the Washington policy is and the flip-flopping happening there as it pertains to, really all legislation, but specifically crypto. But this week, let's talk about what's happening. As I'm talking here, Bitcoin knocking on the door of 107,000 again. Actually, I don't even know what Bitcoin's all-time highs are, but I know we've closed higher than any other previous close in Bitcoin's history. I don't know. I think we had to touch probably 108 or 109 before you get an actual all-time high. But this doesn't surprise me at all. Mostly independent of anything else that's happening. I actually don't think the market is responding that well to the Genius Act. I actually don't think that's that relevant for crypto, other than maybe just increased confidence in digital assets and future legislation. Meaning, I don't think anybody who's existing in crypto really benefits or gets hurt by this. But I do think you might see more entrants and more money coming into crypto as a result of the Genius Act hopefully getting passed here. But really, I think the reason Bitcoin is rallying has nothing to do with that. I think it has to do with the Moody's downgrade last week. So for those who weren't around last Friday, Moody's downgraded the U.S. long-term credit rating from AAA down to AA1. This is now the third agency to have done this. Fitch downgraded the U.S. to AA back in 2023. S&P did it way back in 2011. So now you've got all three rating agencies treating the U.S. as a AA credit. Does this matter? Not really, in the sense that nobody really cares about the AAA rating of the U.S. It's viewed as the risk-free rate. Even just using the word credit rating for something that by definition is supposed to be the risk-free rate is sort of, pointless. Any of the, existing asset managers or insurance funds or banks who have to use credit ratings as sort of a binding agreement on what they can and can't own. Typically, the U.S. is excluded from that anyway. Usually it says you must own U.S. debt or AAA securities. So it doesn't mean a whole lot, and that's why the markets aren't really reacting to it. But it is worth going down memory lane. In August 2011, when S&P downgraded the U.S., this was because of all kinds of political brinkmanship over the debt ceiling. You had doubts about the ability of U.S. policymakers to manage the long-term fiscal issues. When that happened, that was a surprise. The S&P 500 dropped almost 7% that following Monday. Ironically, the U.S. Treasury yields actually fell because investors still viewed the U.S. debt as a safe haven, even though it's sort of, again, paradoxical in the sense that you're buying U.S. Treasuries as a safe haven against yourself being the problem. Obviously, it didn't make a lot of sense, but that's what the market did at the time. The VIX spiked, gold spiked. This is 2011. Bitcoin barely existed. I'm not sure any of Bitcoin's prices were super relevant, but you did see Bitcoin fall from 1340 down to 650 a week later. Again, I don't think that really had anything to do with the downgrade. But fast forward to 2023, when Fitch downgraded the U.S. Using similar language, citing expected fiscal deterioration, high and growing government debt, repeated political standoffs over the debt ceiling. Once again, on the downgrade, the S&P 500 fell over the next few trading days, but this time, the U.S. Treasury yields actually rose, and that's obviously a more I don't know why you want to use the word accurate, but it's a more expected response that U.S. Treasury yields would rise. Bitcoin was around in 2023, and it actually went sideways that week, and then ultimately fell 10% over the next few weeks before ultimately rising over 200% over the next 6 months. I would say that was a little bit of an odd response. I don't really know why Bitcoin would fall on a U.S. downgrade. Obviously, end of 2023 was a pretty strong time for crypto and Bitcoin specifically, but certainly an interesting response to the downgrade. Anyway, fast forward to last week, Moody's cited basically the same things in their factor to downgrade the U.S., including the rising debt to GDP ratio, persistent deficits, the lack of political will to enact fiscal reform, same stuff we've been hearing for 15 years. U.S. equity futures dropped maybe 1.5% Sunday night. And then by the time Monday came around yesterday, ultimately they were unchanged by the end of the day. Meanwhile, the dollar weakened, gold rose, treasury yields actually went up. Again, that's the right response, in my opinion. And Bitcoin was volatile over the weekend, but ultimately little changed. And I think this is where, I think despite the muted reaction to Bitcoin and the initial dip with the equity futures open, it was a foregone conclusion that we were hitting all-time highs this week, and probably going much higher than that. Because if we've learned anything over the past decade, it's that Bitcoin is not going to act like gold as a typical safe haven when markets are in disarray caused by things like wars or leveraged unwinds or fear trades or earnings or whatever. Right? Every time equities fall and gold goes higher and Bitcoin goes down, it's usually because of some market-specific fear where Bitcoin becomes a risk asset. But Bitcoin absolutely does act as a hedge against any kind of loss of confidence in banks and local governments, right? We've seen this 100 times, from Cyprus to anytime there's devaluations in Argentina or South Africa or Turkey, to the Canadian trucking standoff, to the U.S. regional banking crisis, right? Anytime there's a real loss of confidence in banks and local governments, Bitcoin acts as almost like sovereign or bank CDS. And the Moody's downgrade of the U.S., even though it's a stale and lagging indicator, it is an explicit symbol of this decreased confidence. And Bitcoin loves that and should love that. And I expect us to be much higher over the next few weeks here. We'll see if it turns out. The other thing I wrote about this week, if you go to the blog, ar.ca/blog, talked about the hottest trend in digital assets right now, which unfortunately is stocks, right? It's sort of, again, another paradox that we have this amazing on-chain technology that is real-time settlement, and instead we keep jamming everything into these T+1, T+2 boxes like stocks and ETFs. But there's no denying it, from Robinhood stock flying to Coinbase now entering the S&P 500 to Galaxy Digital finally getting a listing on the NASDAQ, to MicroStrategy and all the copycats. Not to mention just regular companies adding Bitcoin to their balance sheet, things like GameStop. And I think there was a medical device company last week that is announcing adding Bitcoin, to governments around the world adding Bitcoin. You name it, right? This is the hottest trend, is just adding Bitcoin or adding other digital assets to the balance sheet. I think what's really interesting here is MicroStrategy obviously mastered this, not necessarily in terms of owning Bitcoin, but in terms of mastering the capital markets, right? Bringing exposure to audiences that otherwise couldn't get it, meaning when they issued straight debt, you now had credit investors who could get access to Bitcoin via the debt. You had, when they issued convertibles, preferreds, et cetera, right? This is just a new investor audience that had no way of having any exposure to crypto, and MicroStrategy tapped into that. And now, of course, that spawned what we're seeing now, the recent slate of SPACs and reverse mergers and rebrands. You're not cool unless you're adding digital assets to your corporate treasury balance sheet. And even though most are just buying Bitcoin, we're seeing it now with Sol and even Tau, things like Sol Strategies and Upexi in the Sol world, XTau about to list in the Canadian exchange. If you look at a comp table, it's not super compelling. Almost all of these are selling at anywhere from 2 to 5 times NAV. And excuse me, as Matt Levine at Bloomberg always points out, this is sort of an easy business, right? You're buying Bitcoin at 100 and you're selling it for 200 to 400 because of the premium. Yet Jim Chanos come out last week saying that he likes the arbitrage trade. He's selling MicroStrategy and buying Bitcoin. Look, it's not going to work. This is where I think almost everybody is misunderstanding how these things work. So this is not a play on the underlying asset. It's really not. Even though there's a high correlation between the two, it's really just a play on volatility, right? The high volatility in the stock is exactly what convertible bond and preferred holders want to see, because they're constantly delta hedging that position. So what that means here is that this has much more to do with whether or not these companies have access to the capital markets than it does the underlying growth. Let's take Upexi, for example, which is recently, I think it was a $5 million market cap, right? A true penny stock before the reverse merger. They went out and raised $100 million in a pipe. Then they used that $100 million to buy Sol. And then they're going to ultimately release those shares to the public soon. And you're looking at something that's trading right now at somewhere around 5 times NAV. Let's say you're trying to do a long short trade, right? You were trying to sell the Upexi shares and you're looking to buy Sol. The problem is you can easily see these shares double or triple without Sol ever going anywhere. And here's an example. Let's say that they go out there and they raise $100 million in new debt or new equity or new converts, and they immediately use that $100 million. Let's say converts. That's the easiest one to say. Let's say they raise $100 million in converts, right? The stock is they have $100 million of underlying SOL. The stock is trading at around $500 million pro forma market cap. They go out there, they issue $100 million of converts. They go out there and they buy $100 million or more SOL. Now you've got $200 million in SOL and a $500 million market cap. Maybe the market cap grows to 600 or 700 million. It's still trading way below where it was before on a premium to NAV standpoint, right? It started at $500 million market cap on $100 million SOL, meaning 5 times, and maybe it grows to 200 million in SOL and 700 million of market cap. So you're talking the premium compressing from 5 times to 3.5 times. But the price of the stock still went up because the market cap of the stock went up from 500 million to 700 million. You can see where I'm going with this, right? It has, in the early days of one of these entities, it just has nothing to do with the underlying price of SOL or Bitcoin or Tau. It has to do with their access to the capital markets. The more they can buy, because of the more access to the capital markets they have, the more underlying SOL or Bitcoin or whatever they can buy. And that ultimately increases the stock price, even if the underlying doesn't go up as the premium compresses. So I think a lot of these are just misunderstood. Certainly these long short trades, in my opinion, aren't going to work. But also I think you could argue that where we're headed is that ultimately some of these shell companies, specifically something like a MicroStrategy, could really end up becoming the Berkshire Hathaway of crypto over time, right? If you really do believe that Bitcoin is going to be some massively scarce asset that everybody wants, well, if you have a company like MicroStrategy that owns 2 to 5% of the supply of Bitcoin, that's really valuable, right? Because it's one thing to say that you could buy a little bit of Bitcoin on your own, but nobody would be able to accumulate that kind of size without moving the market. The best way to get that kind of size would be to be acquired by MicroStrategy. So you could see that there is a world one day where some of these companies like MicroStrategy that just accumulate a ton of Bitcoin or some other scarce asset can ultimately use that as currency in order to maybe get a better ROI on acquisitions, right? You could see one day a company saying, yeah, I've got 2 potential bidders. One's willing to pay me X in dollars. The other one's only going to pay me 60% of X, but they're paying me in Bitcoin. I'm going to take the 60% of X because I'm able to therefore secure an asset that I otherwise wouldn't be able to get on my own. So there is a world where these premiums will be justified. Long story short, I think it's interesting that this is the way the market has gone, right? Instead of bringing everything on chain like we expected, you're going the other way, which is bringing everything on chain back into stocks and ETFs. But certainly some of these holding companies, these reverse mergers, these SPACs that are buying up these assets, it'll be interesting to see what they do with them, right? Again, I don't think these are pure play long short ideas like Jim Chanos is saying. I just do not think that's going to work. I think it's going to be more, what do they do with these underlying assets, right? Are they going to learn how to stake, or are they going to learn how to do on-chain things? Are they going to use them to be acquisitive? There's going to be a longer end game here besides just accumulating the asset. And I look forward to seeing them. So again, check out the blog if you want to see the comp table. Reach out to us if you want to learn more about these. We'll be back next week, presumably with a much higher Bitcoin price if I'm right about my predictions. And that's our 2 Satoshis for this week. Thanks, everyone.